Okay, it's 3 o'clock. I will
Okay,
call.
I'm the chair of
Oh,
this
you're.
meeting.
She's got to call it. Yeah.
Call her.
Thank you. Gotcha, sorry.
Can I be the chair now?
Love the power struggle.
3 o'clock, I'll call this meeting of the board joint meeting with the finance committee, but meeting of the Board of County Commissioners to order.
Okay.
And
Thank
my
you.
dear colleague, Stacy Prada, our treasurer, will be running the meeting.
So the finance committee meeting is in statute for who the members are.
I'm sorry, I'm gonna call to order.
Oh, sorry. Okay, call to order of the finance committee meeting, 3 o'clock. So the finance committee meeting is in statute and the members are the chair of the Board of County Commissioners, which is Heidi Eisenhower, the auditor of the county, who is the secretary, Brenda Honeyford, and then I'm the chair of the finance committee as treasurer. We're having this as a special meeting so that all 3 commissioners can attend. This has been something we've talked about for quite a few years to allow a little more inclusion. And I know it puts a stress on your day, so we will do our best to be efficient. So public comment period. I didn't write down my instructions, but do we have anyone ready to give some public comment?
We don't have members of the public in attendance. I didn't receive any comments to the Jeff BOCC email address. Did you receive any comments on your end?
I did not. Okay,
And there's no public in the room for the record.
so we will proceed. The next item is the approval of the agenda.
I'll move to approve the agenda.
We have a second. Okay, we have a motion from Heidi and a second from Brenda to approve the agenda. All those in favor?
Aye. I think we all vote.
No.
Aye.
Just you.
Aye.
Aye. Do
The
you
only
need it
action
for yours?
The only action items for are for the finance committee members.
Mhm.
And just noting for the record that this is a special meeting of the BOCC and we could not have changed the agenda anyways.
Yes. Okay, thank you.
So we do not need to vote,
Correct,
but Heidi should.
yes.
Got it.
So the 3 voting members are the auditor, the treasurer, and the chair of the board for this meeting.
Thank you.
But we wanted it as a special meeting so that you are able to participate.
Love it. Thank you.
Okay,
And I'm gonna abstain from voting for the minutes because I was not at that meeting.
okay. So a motion to approve the October 23-24 minutes. Do we have a motion? I motion, and I guess I'll second. All those in favor, aye? Aye, and 1 abstention. Okay. So we will dive right into the treasurer's report. And I do have a sheet with my notes. This one. Okay, so if you'd like to move forward, Mark, please. And I will also mention that according to our debt policy and other things, that the county administrator is somewhat of an honorary member of the meeting because it is
Because someone has. to-
crucial. It's crucial to have coordination within the county and representative of the board. Okay, so if you'd like to go to maybe page 3. Okay, so this sheet is intended to give a bit of an overview of the investments. And I'll also just give a broader perspective. The investments covered by the finance committee are all of the investments that the treasurer holds, not just county investments. It includes schools, the port, hospitals, fire districts, everything for the districts in the county, except for the PUD, who has their own treasurer and does their own, and the city of Port Townsend, who also is their own treasurer.
But you used to handle PUD until
I did.
last year?
Yes,
Mark, can you expand this a little bit? I can't read anything on this.
Okay, well, that's why I did it. You just lose data up at the bottom.
Yeah.
Line.
So, the total investments are $242 million. And it includes $236.5 million in the state investment pool. Treasurer's cash is $44 million in the state pool. I try to give context for this because it's not county money. This is, general fund cash balance was 8.46 million in this. And the rest is comprised of ending fund balance of both county and special purpose district funds that they are in cap, but the treasurer is required to invest everything not needed for immediate use. So we do wire daily to the state pool. And are there any questions about the state pool and what that is? Okay.
VIP, it's.
Local
Yeah.
government investment pool, the state treasurer holds it, and they have investments out to 2 years in the LGIP.
You're gonna talk about trends, but it functions kind of like a money market for us.
Yeah. Exactly. So, you could scroll down a little bit. I show, on this chart, that's what it's been over the last year. It's been pretty steady. We do have fluctuations of more cash when property taxes are collected and other things. So I don't think other counties or financials tend to do this history. It hasn't been a whole lot of change, but we do have other things, that I feel like the visual's either good to show changes or that it's similar. So in the LGIP portfolio, we can go to the next screen. This is out of our SimPro, which is our investment software. And when we finish the month, we run the portfolio report, and I sign it saying that this was what the LGIP earned, the total amount for the portfolio, which was $236,571,000. That was invested in the state pool. I should say we have two portfolios. One is the LGIP, everything at the state, and then we'll get into the Jefferson County investment pool later. So that's why this is a subset of all investments. So on the following sheets, you'll see the LGIP allocation and ending balances of all of our funds and districts where we have investments. So the county ones are at the top, and that goes all the way down to the Jefferson County Drain Field Trust, which is really health department holding it, but it's held in trust. It's not county money, but it is for California. All right, on the next sheet, or keep going until we get to the Treasury TAR yield curve. On this one, I did two sheets this time so that you have all of the information I've compiled. So over history from 2004 through today. And so I'd like to maybe go to the next sheet to show you, because it's a little zoomed in, because it shows 2017 through, if you go one more sheet, 2017 through today. And if you want to zoom in on that top graph, I've modified this over time to try to address the issue that we've had I'll call it a technically wonky market. So if you've ever heard of an inverted yield curve, that's when the state treasuries for 10-year are earning less than your 2-year investments. Typically, we're used to, if you tie up money for a longer period of time, you earn more interest. But we've been in an inverted yield curve since the pandemic, or you can see it was really low for quite a few years. It went up,
So is that this light blue line here?
So the light blue is the LGIP. And the 10-year is a darker blue. And so it's not been until the end of last year, about November or so, that that darker blue line is now above the 2-year. So it's really, really, really close to the right where everything comes together. So, yeah, we're still, it's tight on the rates for these durations, but, the lines that are all below that brighter blue line at the top, those are all treasuries for 2-year, 3-year, 5-year, 10-year. And we're only allowed to invest up to 5 years because our job isn't to create a nest egg, it's to keep things going and only collect as much money as we need to keep going up to 5 years. So any questions so far?
Just a statement that was a real benefit, that 5-year max, because you were able to adjust when, when this inverted curve showed its face. And I've heard from Jeffcom and the library and many others that we've all really benefited from the quick work to get out of those. I mean, we had some 5-year CDs and everything that took a little time to get out of, but it's been a real benefit for not just the county, but as you say, all the people that
Okay.
you're the bank for. So just.
Thank you, because I did analysis and kept watching it, and at a certain point, we said, we know what they should get in the LGIP for the rest of the remainder of that time will exceed what the penalty is to get out of those CDs and some other things. We are watching actively to see when should we get longer duration, and that will be on the JCIP. Maybe we'll talk a little more on that. So, any other questions or comments on the rate? Okay, so in this next one,
Well, wait,
oh, go ahead.
they're starting to go down? On that second.
Yes, so if you go up to the blue line, you'll see, and even that, okay, so even the one with all the colors,
The stack.
that one is just the LGIP.
Okay.
The plan has been for a very long time to try to reduce inflation, stabilize the labor pool, and the treasury rates reflect that. The LGIP rate, they have a lot of different investment types that they go in or purchase, but it's up to 2 years. So because rates were so much better for 3-month, 4-month than 2-year, it's coming down quicker than when we had a very unexpected back in the 2010s.
Okay.
So yes, it's coming down and the treasury rates are flipping, but they are all coming down. And there's not a direct relationship to everything, but generally speaking, most people want to see lower home mortgage rates. These treasuries and the Fannie Mae, Freddie Mac, those are the feds loaning money out for home loans.
Right.
And if you want home loans to go down, you want the treasury rates to go down, but you also get to borrow at less.
Right.
Okay, so on this Jefferson County investment pool, these are investments that are either the treasurer's cash, where we're purchasing them with all of the money that is county cash fund balance. And so on that one, you can see the rate for the effective rate of return overall, 3.29. Back in, we were down in the 2s, 3s, the 0.7, all of that for quite a while. And so as things have been maturing, our average rate is going up, but we are cash balanced. So it's when we receive the money The other is some of the investments we bought at discounts, and so they have a different line in our general fund. But it's still all a gain for, them. So on the next one, you're gonna see the individual investments we have, so where it says federal agency coupon and the general fund treasurer, so right there. The previous sheet showed the total portfolio is 5.66 million, but the treasurer's cash investments are the 4,998,300. That's what we paid for them, and that's what the cost value is. But like on that last one where we paid 498,300, when it matures, we'll get a full 500,000. So we bought it at a discount and we'll get more. When you look at the rest of these, you can see Fire District 2, that's Quilcene Capital Projects. Those are their investments. And we just purchased some for them, and they decided to get back in for some longer term investments. And you can see on the very right side, it has the maturity. They wanted the 1 year, 2 year, 3 year, 4 year. And the library has a remaining investment. So one thing to note on those, even though those rates sound really awful, like if you look at the treasury coupons, let's just say the one that says 0.625, right where the cursor is. So they bought $100,000 investment for 89,966. So the interest they'll get each time is the 0.625, but when it matures, they'll get the difference between, they'll get another 10,000 and $3.
Yeah.
So I'm always happy to go over these another time too, but I think this is kind of the basics, and please know, I'm not assuming you don't know any of this. I just think it helps to have everyone have the same baseline. Okay. So on this next sheet, it's the remaining for the library's capital fund. And then the next sheet is accrued interest. So we're cash balance. So this interest earned, if you look at the account, the treasurer's portion at the top, interest for the treasurer goes to the general fund. The interest earned, we didn't receive that. It's the interest on all of our investments. The actual interest we received in December was the $3,850. But you can see we'll get that at some point. Let's see. Any questions on investments?
How did library #1 general fund receive more interest than it earned? You see that?
Accrued interest, the -2 on them.
Yeah, negative $1,588.82 under library #1 general fund.
Oh, the 209 or the,
1710.
1710, yeah, and total -1580.
Yeah, they lost. I just don't understand how that went negative.
so, that one, it matured on December 23rd, 2024. And that was one where they bought it, let's see. Okay, it might not still be on there from this month, the library one. Okay, I'd have to go to a prior month for what that looked like. But
You
it
can
was,
tell me later. I'm just curious why one would go negative.
because they bought it for a different price than the value of it. And so when they bought it, we said, okay, part of the money you put in, it might have been the 1710. Part of the money you put in was paying interest to the people we bought it from.
I see. Okay,
And so
okay.
we have to settle it on our books differently than we used to do it in the AS 400. It would have just been, hey, you paid this much and this is how much you got in interest. we now do it detailed and enter it when we purchase it. How much did you pay as a premium or a discount? And it's booked on another line, but it's still in the, that fund. So
Doesn't necessarily mean they lost money on it.
no, they didn't. Yeah. But because if they bought it at that was the general fund.
Number one general fund,
Yeah.
60,000 was the par value.
Right. Okay, library.
Well,
General
then there's
fund.
actually the next line, there's a 0 par value,
Yeah,
and that's the one that
That
cost,
was the one that matured.
I see,
Yeah.
okay.
that's why.
So when they bought it, they paid $59,535 for it. And it was worth 60,000, and so there was an extra amount that is booked differently,
I
but
see,
technically the interest was different.
okay.
Okay. Good questions. Okay, any other investment questions? All right. Okay,
Appreciate you, Stacy.
thank you. Okay, so now we'll go into debt. Not literally, but. So,
We're gonna talk about the policies
yes,
next,
yeah,
after this.
you got it. So the debt by district and issue. The first debt report is the positions by period. And this is what's happened in December. The amount of, most debt payments are made on June 1st and December 1st. So, and June is typically just interest payments. December is principal and interest. So we have, the idea is you're collecting property tax revenue, sales tax, whatever it is, communication sales tax to pay for it all year. By December, you should have enough money to pay the principal and the interest. So on these, we had the larger principal payments made. And on the left-hand side, you can see there's the 2024 GAN. That one is for the tri-area sewer system, and it's a line of credit. The beginning balance is 2 million. And they don't have to pay the principal until it matures in December 2026. But they do have interest along the way. But that one's not, was not required this month. The tri-area 2016B, that one is also for the sewer system. And so that has 898,000 remaining on it. We had a very clever way of financing things. At the time, we got the one that was 2016B that actually used to be 2004 or something like that, that we refunded in 2016. It was for two things. One was for tri-area and one's for Jeffcom. And so we have an agreement with Jeffcom where we retain some of the communication sales tax and it pays for the debt service. And we only retain the amount we need to meet our 5% reserve amount at the end of the, or always have 5% at least, but the payment's in December and we need to have it in November. So we have a schedule for that. And then the other one is another debt issue that is only Jeffcom, and that one has 335,477 left on it. The Port Hadlock wastewater loan, that one, it's fully due in June of 2023, and that's at 1.27 million balance. The rest, yes.
2033.
Sorry. I don't know what I said, but I read 2033. Thank you. So the rest of these, we have Fire District 1, which is East Jefferson Fire and Rescue. Fire District 4 is Brennan. Fire 5 is Discovery Bay. Hospital District 2, that's our Jefferson General. And then the Port of Port Townsend, and they have a lot. And then school district 50, so they still have 26 million in debt for the new schools and all of the work they've done. Any questions on this so far? Okay. So the next sheet is another way of showing this, and it's a summary for each district. And so the county's at the top. And it shows how much we have to pay each year for the next 30 years. And this is statement of 30 years is something we have to do in our annual report each year. And you show the first 5 years of what you need to pay in principal and interest. And then the next out to 30 years are in 5-year increments. And so you can see currently the county debt, we don't have anything past 33. Okay, and then the rest are similar.
District out to 35, looks like.
Yes. And I absolutely just encourage you to ask questions, but also just soak it up and don't expect to, I'm not giving you a pop quiz at the end.
Why is it, can you explain the school district 50s, 13, million principal, why does it go up so much in 2030 to 34?
So in the way that they did, the way they scheduled their debt through bond council and everything, they have a balloon payment.
Got it.
So on these, one of these is, let's see. Oh, it doesn't show it here, but it's 2017 to 2035. And I could always show you the debt schedule at some point, but usually when it says range of rates 2 to 5, basically, if you buy one of these investments we have in the treasury securities, if we were buying one of those, it would be, we're gonna buy the one that matures in 2028 at let's just say 4.2%. So it's made up of all of these schedules. So each December, one of those is being paid the principal of the full investment, and then it's basically investments for every year, and some of it matures every year for the whole bundle. But if I showed you one, it would really make more sense. Okay. So I also include this chart. So the general obligation debt, because you care more about, understandably, the county debt and how that affects our cash flow. I've got this done by Jeffcom or Jefferson County. And so on the very left, it's the date due. On this next box, we have Jeffcom's amount that we keep from the communication sales tax and pay per that schedule. And those are the orange and the blue in the chart above, which is very small compared to it. And then for Jefferson County, we have the rest, everything else, which includes the 2024 GAN. And one thing I wanted to make sure you understood is that the reason they don't match exactly is because Public Works drew another $1 million right at the beginning of January. So when it's looking to the future, it's including it. When you say, what did we owe on 12/31? We didn't know that yet because we didn't pull it. So that's why there's a difference in those. Okay. Any questions on that? Yeah.
I'm just gonna ask a really stupid question.
I like those.
I don't understand why. So on the general obligation debt chart that you were, this one. So for 2025, showing $500,000 across the various values. But in 2026, it shows 3.5 million, and then it goes back down like 250,000 or something. What's that?
Yeah, It's the line of credit for the sewer system is all due in 2026. So
Okay,
there's gonna, 3 million of that is paying the principal on the 2024 GAN, which is a grant anticipation note. Good question. And so you can see the rest of that for the principal, it would have been 144,720, which is close to the surrounding years.
going back,
They did in January. They drew 2 million to start,
Okay,
um,
but they got the big
in
bills coming in.
24, and then January, the first business day of the year, we drew another $1 million.
Right, so for Heather's benefit, the GAN helps Public Works with liquidity on the sewer. So they borrow from the GAN, pay contractors, go to the state, get reimbursed.
Yes,
It's like our opportunity fund and some.
right.
Yeah,
So they're able to borrow 10 million, but the idea is they only borrow as much as they need to use because they're paying interest on it. And grants don't pay for the interest.
and who holds the GAN? Is it,
We,
it's our
Oh,
fund?
oh, so, no, sorry, we got the loan from Kitsap Bank.
Okay. Okay,
We went through a placement agent and used bond counsel.
mhm,
But in the bidding process, US Bank had the best terms and the type of thing we had. So
okay,
the other is the interest rate has gone down since we got it. And I'm sorry, I don't have that number with me right now.
so functionally, the bond becomes the loan guarantee and the bank funds it basically and gets reimbursed through the.
No, they're just giving us the lump sum and Public Works is billing the grants coming directly to us. But then on the schedule that they've loaned it to us, we'll make the payments on the interest and then the full amount.
Yeah, okay.
Okay, good questions, everyone. Anything else on the specifics of our holdings and our?
I could stay here, all day.
Yeah. I'd love that. Okay, so each year. Let's just go back to the agenda. So we finished 5, the discussion of the treasurer's report, and there's no action needed on that item. It's just information, and I do post these monthly. So we meet quarterly, but we post them monthly and I have them back for quite a long time. So the debt policy and the investment policy are required by RCW that the finance committee approves these. It's for all of the districts and the county, not just county operations. So the debt policy is one that we updated in 2017. And then, well, we adopted in 2017, we had updated it in 2019 and again in 2020. Part of the reason for that is that we have at the very back of it, our reserve policy.
Yeah.
So that was adopted in 2019. I'd have to look at what the others were, it might have just, anyway. Okay. So in the debt policy, it identifies what kind of debt we can enter into and what the procedures are, what the roles and responsibilities are. When we updated it from a very, very old version prior to 2017, we used D.A. Davidson, Jim Nelson to assist with us. And the idea behind this is not just to have a debt policy that tells us what we can do, but also have something that hopefully will allow our bond rating to be good. So, you can see. So the last time we went out for a credit rating, it was AA. And we haven't had to go out for another bond rating because we've had private placement loans since then. It does cost money, it's a lot of work to do this, but the hope is that with solid financial policies, this would be one component that would help our interest rate if we ever decide to go out for more general obligation debt and need a new rating. So essentially, we've got, that's the credit objective. And that talks about our reserve policy, and that allows us to hopefully have enough money in a downturn, and we have fared well in some pretty drastic times. So that's been good. We've got all of the statutes and requirements we need to meet. And then it talks about unlimited tax general obligation debt and limited, and what things are levies, revenue bonds. That's what our, it's kind of what our grant anticipation note is. We know that revenue is coming. Often it'll be if you do a new district and decide to use a sales tax, you would be issuing a revenue bond under the assumption you will be making this amount of money each year and that you'll be able to pay the debt. So it goes through all of those. The local program is the state treasurer's option to provide loans for equipment. And then we've got our limits. These are things that get into how much valuation is in the county, all kinds of things, because that's based on what property taxes are you gonna be collecting. And this is a very, I'm wincing a little because Jeff would probably get a little nervous with me touching it and saying it that simply. And then we are authorized to use professional services. And for debt issuance, it talks about what type of maturity structure needs to be a competitive sale, and that's how we've used a placement agent in the past. We are allowed to refund things, and we have done that twice for a bunch of the county debt. That's why it's, and so refunding is the government version of a home refinance, but it's called a refunding. And the requirements for that. And so this is really something that the idea is that the people on the finance committee entrusted with the requirement to have a debt policy have looked at it and we're reauthorizing it. I haven't seen anything that needs updating. We managed to use it quite well. I think if there were changes proposed by the county for the reserve policy or other types of things, we'd want to make sure that the finance committee is doing that. I'm not saying that there's any push for that. It's just, that would be an example of when it would need to be updated or if there were requirements that changed.
Question,
Yes,
so we form a PFB. And you quote a bond measure, you get a 2% of 1% sales tax approved by the voters, and then we go to issue debt. Could you help the PFB with all that?
yes. So I do that with all the districts already. They're required to notify me 30 days in advance. Of course, that goes real quick. We really like to be involved earlier than that. But in all of the bond closing documents, I'm reviewing them to make sure that they've got our fiscal agent, that because we're at the treasurer's office is the one who has to physically make the payments. So districts do their own bookkeeping, accounting, annual reports, other things, but the treasurer is the one entrusted to do general obligation debt. There is some other types of loans where I guess the treasurer is not required to be making those, and so you know, the hospital had some they would make directly, and we have some that Public Works makes directly, and those are not on here. You would see on the annual report all of the debt, which they've expanded this year, what needs to be included, but there are some other loans with the Public Works Trust Fund Board, other types of things that are county debt.
Okay, and the other side of that is the investment
Yes,
side.
yes.
You would also handle that for the PFD.
Yes.
Okay.
Yeah. So any questions on the debt so far?
I have just a
Yeah.
few questions on the debt policy.
Okay.
One is under the roles and responsibilities. Can you help me understand the commissioners? It says the county commissioners shall initiate all debt issuance upon request of the county administrator. So I read that to say that if the county administrator comes to the commissioners and requests an issuance of debt, that we shall initiate it.
Yes, but I mean, there's the pragmatic side of it. We
Well,
can't enter you into debt if you don't want to.
Then it wouldn't be a surprise.
Yeah,
Right.
There'd be all kinds of
But it's-
meetings and discussions leading up to the issuance of debt.
So even with this language, commissioners could
you could refuse to.
refuse to do it,
Yeah.
even though it says shall.
Right, but I would never bring a request to issue debt to you.
Not ever a question of the actual individual in the role, it's just I'm trying to understand the language. If truly I
Yeah.
read this and thought, oh, well, the job of the commissioners is to just issue the debt, it's.
I agree with, maybe that could have been worded differently, because I would say we can't enter into debt unless the county commissioners approve it.
The intention of the.
Yeah,
Yeah.
Are you looking at page 3?
Page 3, yeah, it's
Yeah.
under roles and
Oh,
responsibilities.
yeah, in that same section. I noticed this earlier, but I wasn't gonna bring it up, but since we're back there. The last 2 words, by the county council.
Yeah.
yeah.
We're
These were all
by the
done by,
yeah,
this was-
AI.
I went to the RCW and thought maybe that language was from the RCW, but it's not, I think it's just.
Seems like it could be Board of County.
Yeah, I mean,
I will make a note of that.
I'm getting some comments from the public saying that some of us are muffled, so just
Okay.
be.
make
And
sure.
it's not you, Stacy, but make sure when you're speaking to speak to the little owl, the cute little owl.
and a cute little owl.
Clearly.
I have a couple other questions. It's still on page 3 there, and I only have 3 questions, so I promise I won't belabor any of it. Can you tell me about the capital improvement plan? It says that it should be reviewed and updated biennially. Does that happen? So the capital improvement
When
plan
the budget's adopted, that's part of it.
that gets reviewed at that same time. Okay, cool. And then the list of reserve recommendations all the way at the end, page 13
Yes,
and 14. I just was trying to understand. Because most of them are a percentage of total spending or a certain amount, right? There's one department, I think it was the public health. Let me look at my note here, my little post-it notes are getting hard to read. It is, yeah,
The
the Department of
minimum.
Public Health, they just have an amount. And I
Yes.
wonder, like, what happens if their budget is, inflation happens and they really should be reserving more? Why is that only that one department, not a percentage of their spending?
so it would, often it's based on the resolution that the board adopted to create the fund.
Ah.
And any type of money that maybe came from the general fund, the seed money, these are examples, I don't know
Mhm.
specifically on that one. But that's typically what it is, and why you'll see a minimum of certain things.
Yeah, it's such a specific amount. That's why I
Yes.
noticed it. It's $253,981. They do. It's like,
Well, we accidentally hit the keyboard when typing that one, so. It's, yeah, but I actually will look into that one. Because
Yeah, it's been that way since I arrived here in 2017.
Yeah.
I don't know the
Maybe
logic
it's
for it.
supposed to be a percentage and,
Their fund balance usually hovers around 4 million.
okay.
And that's something that I've been kind of starting to look into is this, the reserves here.
Yeah,
So to make sure with inflation,
right.
that we're staying in line with what we
keeping up.
should be, so.
Okay, my only other question is, has to do with pronouns. I feel
Mhm.
like when we
Yeah.
are reviewing, and I would never ask for this document to be changed if there weren't other changes.
Mhm.
But I think at this, in this day and age, that we should, when we're looking at renewing documents, that we should choose a consistent. Sort of approach to pronouns. This one has one circumstance where it refers to only a male pronoun. And one that has a his, her. I'm a fan of they, them, because it's the most inclusive, but, and I don't really
Mhm.
have a preference which way it goes, but when it gets changed, and maybe the consistency to go with the more inclusive pronoun would be good.
Yes, agreed. I'll keep a list.
Okay. Other questions or any best?
Okay.
I just also just loved that this is here. That these two policies were, I really strangely enjoyed reading these policies and that they are seen really practicable and useful.
Mhm.
And so thank you for putting them forward.
So I will ask, the finance committee membership if, and I'll entertain a motion to reauthorize the debt policy.
I'll make a motion to reauthorize the debt policy.
Council change the board of commissioners.
Hmm?
The count-
Yes,
the county
yes,
council.
I've got 3 items on there. Thank you. So Heidi's moved to reauthorize and Brenda has seconded. Any discussion?
I noticed there's a different font on page 3 in the middle of the page.
When we go into the capital. Section.
Page 3, middle
Yes.
of the page.
Okay. Page 3,
Sorry.
font. Yeah, or I think, well, yeah. There might be 3 on there. Okay.
On to investment policy.
That's nice.
Oh, it's been
And
moved.
all those in favor of reauthorizing the debt policy, say aye. Aye. Aye, unanimous. Thank you very much. Okay. Investment policy, so when we reauthorize it, would it? Those changes be there or not? I think, no, well, I'll look at what I've got. Usually I would have a little sheet and we can, sign that, as part of the minutes of the next meeting. Okay. Okay. Reauthorize form. Because we were changing things and how we were doing them, it was said to change a few things, so. Okay, so on to the investment policy. So we talked quite a bit about investments when we were looking at the actual December reports. This is where when a district asks us, what can we do for our investments? I have to say very clearly that we are not going to be doing, some of these other investments, we're not going beyond 5 years. They need to qualify in the sections here. So we have our conduct, the types of funds. And so we've got trust and agency funds. That might need an update, Judy. We'll have to see if that covers everything.
Stacey, where are you? Sorry.
Under scope on page
Page 2.
2.
Okay. Thanks.
2. I'll just have that as a note if needed for update, because of the audit types of funds they talk about and what
I see.
actually,
Yeah.
some of them we don't. So custody, we don't invest, so it might be that's why that's not there. So custody, an example would be like the funds we collect for state schools.
Okay,
and any other thing for the state through recording or courts that we then send them once a month.
mhm,
Okay. We do have ethics and ongoing training. I am the main person on the investments, but we do have our accountant investment officers able to do things, but I am very hands-on the mechanics of this at this point. Ever since we had all of the people that had between 20 and 30 years retire, and we have new people now. Okay, and so this is where you have the prudent person standard and ethics. And these are public funds. We need to make sure that we're not putting them at risk. Can't take gifts and other things. We have internal controls for how we do this. Every time there's an investment change or a payment or anything, we have 3 other people copied on those emails, so we all know what's happening in real time at our banks. So the investment authority, that's where we have currently the Jefferson County Treasurer is the investment officer. And deputy treasurers work under the guidance and direction of the county treasurer, and so that's where we have people able to do things, but it's all under my authority. Anyone we work with or banks, or the treasuries and all of those are the investment, those are through the feds, but when we have CDs or things like that, they have to be the PDPC approved by the state. And they have criteria like how liquid their holdings are and how stable the financial institute is. We cannot put investments outside the state of Washington. Except of course, those federal items. And we have some brokers we work with. And we require financial statements ongoing. We definitely have a lot less right now just because most of our investments are with the state pool. The section 8 is where the authorized investments are detailed. One of the things that the state law allows are investments in just the very highest rated corporate investments. And if you were not here or don't remember Occupy Port Townsend, that was a case where we were banking with Bank of America, and there was a lot of frustration because they had holdings and things that the population here didn't like, and they stood outside the bank and protested for over a year. So when Bank of America dropped us because we had a complete crash of the housing market, right? Anyway, and they adopted the Dodd-Frank Act. At the time, I don't know where it is today, but at the time it was any bank with over $240 billion in holdings, they were held to a different standard. Bank of America was over that. US Bank was a little bit under, but I would assume they are over that now. But we ended up going with First Security Bank for our main banking, which, I mean, out of all this money, they have like $4 to $6 million of it. It's very small, but that's our daily banking and money in and out. And they were originally a credit union. They purchased the locations for the Bank of Americas locally. And in our contract, we were able to allow them to become our new provider based on we're paying them a lot less. At the time, say 2014, 2015, we were paying them $1,500 to $2,000 a month for banking fees for all of the districts and all of ours. And we rarely pay anything to them now. It's an offset for what is there. We get an earned credit for what they're holding. Okay. I know this feels really wound around, but I'm trying to give the overview today and then we'll be more specific. So the ones that are allowed would be like the very highest rated corporate. And so because the reason I bring up Bank of America and all of that is all of them have holdings that I do not think would fly in our local community. So I'm not apt to suggest we put that in there.
Yeah, that's just one of the reasons I was looking something up. I promise I wasn't texting during your presentation, but I got a question during the campaign trail about looking into whether Jefferson County was invested in any corporations that made weapons, especially those that are sending weapons, to support foreign wars. And
So no corporation,
no corporations
we
at all.
invest in the federal government.
Which sends weapons?
Right, exactly.
But they are the least risk.
Mhm.
Okay. So we've got all the restrictions, the maximum maturities of 5 years. Safekeeping, we have, for those are for the specific investments that are not in the pool or not a CD. We have a safekeeping account where when we're purchasing them or receiving things, we don't go directly to the clearinghouse, all of that, it goes through our safekeeping account. All right, and then accounting, the investment service fee, we charge 5% on the interest for each investment, up to a max of $50 per year on something like a security where they're getting paid twice a year or anyway. But so for the LGIP, it's $5 up to $50 each month based on how much they earn. It's not a lot given how much they've been earning. Okay, and then we have an appendix that has all of the terms, the depositories, links to credit unions, the authorized investments, the firms we've accepted. So part of that was we added Stifel in April of 2022. We've been using them since '96. We also have multi-bank securities where I can go on and look at everything. And then we had Principal Financial Group, that was that's the safekeeping. So, and then we've got all of our terms that we thought would be relevant and useful when looking through this, and then that would be it on the investment policy. Any questions?
Good timing, I'd say.
Okay.
I'm happy to make a motion to reauthorize the investment policy.
Thank you.
I'll second. No, I can't.
Brenda will second. Okay, all those in favor say aye.
Aye.
Okay. Reauthorize. So, thank you all. The next item on the agenda is discussion suggestions for next or future agenda. Are there any suggestions?
I think it would be good to invite our central services director to the next.
I think he's on
Oh, you're right.
digitally.
Okay, well, I'm just saying, because Mark's scheduled to retire,
Mhm.
and I feel like just for continuity's sake,
Yeah,
having overlap and brains in the room might be good.
Well, there'll be a new me shortly.
That's
I know,
right. There
I
would
know,
be
but
also-
I just,
so I've always.
there might not be by then.
Okay.
So I've always included the central services director in my monthly copy to keep them informed, especially since debt and the capital improvement plan and all of those kinds of things are involved. And you know, depends on the year, but often that was the second and, you know, the backfill for the county administrator, so. If anyone else wants to receive the monthly notifications, I'll gladly add them, but I do have, the central services rep. And he was here and he decided to go watch,
Okay.
online,
In the comfort of this.
And I've seen it, I'm sorry, I was
yeah,
noticing it in the
yeah,
first policy.
So we can multitask.
yeah, exactly. Anything else?
So much.
Okay,
Great.
well, then we will go ahead and adjourn. As of 4 o'clock.
Okay, and we will adjourn our BOCC Finance Committee meeting as of 4 o'clock as well, all right?
All right, we're ready for another joint meeting in an hour, right?
So we're not going back to our VOCC.